Welcome to CoinGeek Conversations, and this week we're diving into the financial world with Bitcoin SV. We'll be learning about trading and investment through the work of the London-based company Be Quant. Be Quant describes its services as, quote, a one-stop solution for professional digital assets investors and institutions. I'd like to welcome the founder and CEO of Be Quant, George Zarya. Hi, George.
Hi, Charles. Thank you for having me.
You're listening to CoinGeek Conversations with Charles Miller.
Let me start by asking you a bit about Be Quant. I've looked at your website and there are all sorts of services that you offer. Can you maybe just take me through them and just give me a kind of brief thumbnail about what the different things are in your sort of portfolio of services?
Yeah. I'll do it in chronological order, and a bit of a history of how Be Quant has got to where we are. My background is prime brokerage electronic trading, and most of the team comes from the traditional finance backgrounds.
I'm glad you started there, because my first question was going to be, what exactly is prime brokerage?
The prime brokerage is one of the key components within the institutional infrastructure of the financial markets. The prime brokers are usually in the traditional finance sense, large institutions that offer a multitude of different services to their clients, and they service buy side and the sell side, so meaning like hedge funds, asset managers, and they also service smaller brokers as well. So you can have a mini prime brokerage setup. But the prime broker offers a multitude of services in terms of accessing liquidity, providing a true one-stop solution for the clients in terms of clearing, settlement, market access, connectivity, and one of the most important parts is the lending, offering leverage, extending their balance sheet to their clients and increasing return on investment of their strategies. Basically, it's a capital efficiency role that prime brokers pride themselves for.
Right. So that's one of your functions at Be Quant, which incorporates a whole lot of things within it, as you've already explained. But then we'll go on to the next thing, which I saw, which is the Be Quant exchange.
Correct. That's how we started, basically, the business, and it was back in 2017 when we looked at the retail hype in full swing, and we saw the institutional community is being basically put on the same sort of a support and the product, from the product perspective, the same level as retail clients. We saw there's a need for an institutional approach, institutional service. And again, piggybacking off our experience, we pulled the liquidity from an existing crypto exchanges. We piggybacked off established technology space, and we offered a convenient way for the institutional clients that have been trading assets or were looking to get into the market with sort of a familiar way of operating. So these things like fixed protocol, for example, right? That's something very standard for the traditional markets. It's sort of normalized, standardized protocol for exchanging market data and orders with the exchanges, for example. So something that was very new for the crypto space. We've introduced that. We've offered a co-location facility to shave off network latency for clients who are sensitive to latency. We looked at how we can provide lending to the clients and offer leverage, and just the general sort of on the service model. It's more of a face-to-face kind of communication and knowing your clients.
You're describing the services you offer, and am I right in thinking then that you are working exclusively with crypto, but that you are trying to make the offer as familiar as possible to the more traditional part of the financial industry?
Exactly. So the motto for many of our industry peers is bridging the gap between the traditional finance And that's exactly what we're doing. We're trying to bring in more professionalism, more established type of approach, and things that have already recommended itself, and apply it to the new emerging market. Because of the technology side of things, the way you build the business model is a very creative, innovative process, because things are so much more flexible. So it's not a cookie cutter approach. So as we go, we invent things. We look at how can we offer this? Can we pair that? Can we integrate this into this, and basically bulk it and make it more convenient? And that's an interesting process in itself. And if we look at the sort of the basis of how the industry started growing was decentralization and removing the intermediaries from the whole cycle. In the institutional world, the intermediaries play a very important role. That's why we feel that the prime brokerage solutions, the professional exchanges that sort of aggregate source liquidity, brokers, liquidity providers, are very important to sort of facilitate these functions. So all in all, we try to sort of simplify the access to the market. We've achieved quite a lot of. We shaved off a lot of inefficiencies. If I judge from my experience in the traditional space, where we had an army of operations people, army of onboarding people, and a handful of IT guys sitting in the corner. Now things have changed tremendously. You have an army of IT guys and zero operations.
Right.
Everything is automated. Yeah.
So the final thing I just wanted to touch on is SafeQuant, which is your custody unit. So that is like holding people's cryptocurrencies and stuff?
Exactly. So when we started with the exchange, and again, we the security of the assets, and again, the times when we launched our exchange business was around 2018, and the exchange hacks were very common. You hear about it every other month or so. So we really drilled deep into the technology stack and made sure we control and fully understand how to mitigate any of the risks. I mean, the technology part can be as complex as you want it to be. I mean, there's so many technology innovative tools and features that the custodians now offer. But from our perspective, it's a lot of it is about managing the human error risks and building proper operational procedures to mitigate these kind of risks.
Again, sticking with the basics here, when did Be Quant start, and how big is it as a business?
Well, we started in essentially early 2018, and I mean we're only about 2 years old essentially, so it hasn't been that long. It feels like a decade, to be honest, because so many things have changed and happened, and we've been growing very at an extreme pace. I mean, I think the part of the reason why a lot of people move into the industry is the dynamics of the space, and the traditional space is becoming utterly boring, and it's just you cannot stand it. And I mean, we grew into a team of 35 full-time staff. We have an office in Malta. We have an office in London, our main office in London. And we started with the lockdown, we actually kind of loosened up our policies in terms of hiring. We now have team based all over the world and working remotely. We basically grew to a 35 staff, plus we outsourced quite a bit of tech talent to other counterparties. And the volume-wise, we exchange has been generating roughly 800 million to a billion monthly turnover. Our prime brokerage operation, on the other hand, has been booming massively because of the essentially we offer access to the entire market. We offer access to 8 exchanges at the moment, expanding to about a dozen by end of the year. And the volumes, the average volume on an average day exceeds 100 million a day. So again, these numbers are maybe shocking, but again, from the institutional perspective, it's a normal sort of sizes that your typical quantitative trading fund would generate. They typically do high volumes. They have very small margins that they pay or they make. So it's a completely different scale of business. Let's put it that way.
Yeah, I mean, I was wondering how different what you offer is from competitors, and sort of what makes a business sort of better than another business in this field.
I wouldn't say better, worse. We all find our own niches within the space, and we try to sort of look at the niches that are untaken, and we would popularize, let's say, prime brokerage term earlier than the rest of the crew, and that's something that had really become a buzzword in the last, I'd say, 3 months, really. And we've been live since beginning of this year. The prime brokerage concept was something that really positions us and puts us apart. And again, a lot of people in the industry look at they that don't quite understand the prime brokerage term, and there's different interpretations of the prime brokerage. In our view, it's I think it's the closest one to the traditional markets, right? So the prime broker that provides direct market access, and the prime broker is the person or the entity that provides leverage and extends financing to the trading clients. That's key roles. Then we see these prime brokers that provide just lending. They're prime brokers that just provide execution against one order book, and they call themselves prime broker. Or they provide a collateral management tools, and they call themselves prime broker. Or a technology stack that aggregates order books is also prime broker. So this is something that I think the industry will need to iron out and come up with the solid explanation what the prime broker is down the line.
And I wonder, how much is this a sort of people industry, in the sense that you're going to be successful if you know the right people and if your staff are nice to deal with and efficient, and rather than the specific technical services that you offer? Do you have people who go out and sort of sell Be Quant to potential customers? Is that a key part of the business?
It is very much people's business, and again, there's no better way of getting to know each other other than just the personal contact, and that hasn't gone anywhere. And the industry that is built on decentralization and very global kind of look at things hasn't eliminated the human touch aspects. And again, when we're talking about large clients, large amounts of money, you need to do your due diligence. You need to know the people you're working with. So we're sitting in the city of London, in the center of the financial industry of UK. So there's a lot of meetings happening on the weekly, daily basis. Less so now, but on a good day, we would have 2-3 meetings a day in our office here. So there's still a lot of human interaction and a lot of human touch.
But then once you've established the trust of your customer, then I guess it passes over to algorithms, and the computers just sort of make the decisions for you.
Yeah, the technology is paramount. I mean, and the whole disruption of the space and not just the financial industry has been based on the technology. So it's a sort of a must-have type of thing. You need to have the talent, the know-how, the deep understanding of the underlying technology, and build your business case out of there. So we're trying to automate things. We're trying to use technology in pretty much everything we do.
Right. So now you offer trading in a whole range of cryptocurrencies, Ethereum, Litecoin, Bitcoin, and many others. And you've also added Bitcoin SV. How would you characterize, perhaps if you're talking to a potential client, how would you characterize Bitcoin SV as distinct from the others?
Well, it would be more like an investment advice, which I'm not regulated to do so.
Oh, okay.
But I mean, when we're when we're talking about the top currencies, the top cryptocurrencies, and trying to educate the traders or the investors about one or the other. I mean, there's clearly one of the things that we always talk about is the team, the legacy, the backing, the traction, and the adoption of the coins. These are the things that are important. Bitcoin SV has been one of the oldest coins out there in the space. I mean, we see a lot of new coins popping out, and there's, they go up and down. There's a lot of volatility in that space. Sometimes it could be artificial pump and dump type of things, but we like stability. And again, when we talk to the institutional client base, we like projects and that are there and that have been there for quite a while.
But I mean, Bitcoin SV has only existed for like a couple of years. Is that what you mean by old?
Exactly. Well, a couple of years in our industry is a lot too.
Right.
I mean, it's dog year. It's dog years.
Right.
And it's totally dog years.
Right. If somebody who hadn't heard of it just said, "Oh, well, what is this BSV thing?" Do you have a sort of what would your one sentence explanation or characterization be?
It's a fork from the original Bitcoin, and that's and would be pretty simple, yeah. And and then we can go into details why and how and so on and so forth.
Because within the Bitcoin SV community, there's a whole emphasis on sort of scaling the blocks and building apps and stuff on it to make it useful and not just a commodity. Is that something that interests you at all, or is it just sort of a commodity as far as you're concerned?
The adoption is one of the most important things for the industry, generally speaking, right? And again, we support any project that is working towards that goal and offers the tools to build upon and grow the industry, essentially, because we're all in one boat, essentially. So absolutely, the teams that not just take, but they also give back, and they guide and they promote the concepts and the benefits of the blockchain technology generally is something that we absolutely fund off, and we're definitely happy to support.
Do you think that, you talk about 2 years being a long time. It's true that some of these currencies have been around for a few years, and people have made and lost massive amounts of money on them already. Do you see that kind of speculative investment as simply a preliminary to the time at which it's going to be discovered what they're actually useful for?
The speculative liquidity is equally important to the buy and hold. Again, that's what makes the market grow and evolve. Obviously, from the longevity perspective, the industry will benefit more from the sort of a long-term view and long-term believers, the buy and hold crowd. And in many cases, it's equally retail and distributed between the retail and institutional community. But the speculative nature is actually it's absolutely normal. And I worked in the emerging markets in Russia, China, India. I understand how the structured markets. And when you look at the cryptocurrency space, it's sort of reminiscent of the forex markets back in the 80s. And there's a lot of volatility. There's a lot of speculation. So volatility drives speculators. And people tend to make money and to lose money off of this volatility. So it's clearly not the sort of the asset class that you would invest your last money into. It's also one of these up and coming asset classes that will be more efficient, less volatile, more predictable in 5-10 years down the line. That's why we're in this industry.
So you mentioned about the sort of volatility that you see in emerging markets as being perhaps similar to what we're seeing in the crypto markets. But I guess the difference is that in emerging markets, there is a clear view of future profitability for these industries, even if they haven't quite got there. Whereas I think in the crypto market, there's still a bit of a question mark about, well, what's the point of the whole thing? So I suppose my question is, can you have a successful commodity like a bunch of cryptocurrencies forever if people don't really know what they're for, apart from potentially being of speculative value?
Well, it's an arguable point, actually. So I mean, if we look back, I mean, the way the prices for the digital assets were, if we zoom out, basically the price is going up and up and up, and it's again it's similar patterns to the high growth, high risk emerging markets situation. So. And in terms of finding the digital assets, finding its place within the financial industry as a particular sub-asset class or asset class that represents or has specific features for the investors that may be interesting, and I think the answer is it has already found its place. And there are a number of points here. First of all, it has the unique features such as, well, a limited supply, or, well, some people can argue that the Bitcoin can be forked as many times, or BSV can be forked as well, and so on and so forth. But generally, we're seeing that the projects that have started early maintaining their popularity, and they're delivering on what's promised. Is basically is a hedge from the inflation, essentially, and that's something that is being very talked widely right now amongst the economists and the proponents of cryptocurrencies. That the Bitcoin is your hedge from the inflation.
So in that sense, it's sort of like gold or something, right?
Exactly. Yes. The analogy is to gold. So gold has a limited supply as well. That's I mean, again, same sort of category. But the other very important aspects of Bitcoin and in particular the cryptocurrencies that are very correlated to Bitcoin, let's put it that way, that it's asymmetric to the performance of the other asset classes. So if we think from the professional investor perspective, if diversification is always a key golden rule, right? You have to have diversification within your portfolio. You look at these studies of some of the traditional players and research houses that look at the correlations between different asset classes, and they say basically if you have 2% of your portfolio invested into the cryptocurrencies, your returns get significant boost. That in itself, I think, is an absolutely a fine for any investor that someone needs to. All the traditional fund managers just need to have a look at this particular aspect of it.
Recently, haven't we seen the crypto markets rising more in parallel with the Nasdaq and the S&P, not doing the opposite?
True, but again, these trends. When the correlation seems to be in line with the traditional markets are based on a very, very short period of time.
Right.
And it's weeks. But if you look at zoom out. I mean, you're not investing in with the horizon of a 2-week period. You're investing with the horizon, 6 to 12 months to 12 years. And from that perspective, if you look back and you look at the correlation of the asset classes, it makes perfect sense.
Just a couple of other things I was just going to raise, looking ahead, I suppose, before we finish. There's been a lot of action in the decentralized finance area in the past few months. DeFi. I don't really pretend to understand what that's about, but is that something that we should be taking an interest in? Is that on your radar?
Absolutely. I mean, we come from a perspective of a CeFi, which is a centralized finance, but at the same time, we embrace any innovation or any innovative projects in the space, with the view to adopt maybe some of them that will stick. Right now, it's a bit too early to say.
Maybe you could give me just a kind of couple of sentence beginner's guide to what DeFi is.
A simple example would be the financing market, right? So basically, it's the what we call in the professional terminology repo market. So you basically you swap assets. You give one asset, you take another asset that you need, you pledge it. So within the sort of a centralized structure, you put it as a collateral in one account, and you get an asset on the other. In the DeFi space, it's basically done on blockchain essentially. It's automated, it's decentralized. Nobody actually controls the books that gives assets and gives up. It's more like a peer-to-peer type of analogy. So that's an innovative business model and approach aimed to bring more participants to the market. And we've seen that there's the DEXs generally have had an influx of liquidity. I cannot say that it's going to last forever, and they will keep growing. We're also seeing there's a push from the regulators to actually clamp down on DEXs and dark pools and basically put the regulatory constraints and rules on the entire market. And again, there's balances and checks and balances from our perspective, again, we're taking a more conservative approach. Minding that the institutional clients behind us, and they're probably being even more conservative, and they have compliance and risk managers and so on and so forth. So we need to really see through all the ups and downs.
Yeah, because like a couple of years ago, there was a big amount of money going into ICOs, independent coin offerings, and then there was a bit of a reaction against that, saying, oh, well, that really wasn't a good idea. Do you think that in a couple of years' time, we'll be looking on this DeFi business in rather the same way?
Well, I think we start to learn from our mistakes much quicker. And like I said, it's dog years is what portrays this market is. Things happen in such a fast pace. I mean, the DeFi is going up and down, and it's people get burned. They learn the lesson. They be more careful next time, and it becomes it's a learning curve for everyone. But with the ICOs, I think it was definitely overhyped and stayed for way too long than it should have been. With DeFi, I think it hasn't reached the sizes of the proportions of the ICO hype. But again, I think there's much more thought and much more professionalism in the space to sort of steer majority of the retail clients. But again, everybody's making their own decisions. They understand it's a highly volatile. They should understand it's a highly volatile and risky market where you can lose all your money.
Right. Well, one other thing, finally, to sort of look ahead is the possibility of central bank digital currencies. China, the People's Bank of China, seems to be moving ahead with this. They've described it as potentially an alternative to cash rather than anything else. So I'm wondering does that put it rather outside your remit?
Well, no, I think in terms of the evolution of the blockchain industry, it's the next step, and it's really good example where a very large part of the global economy is embracing the benefits of the technology. I mean, if you look at the existing flows in China in particular, they're all electronic to begin with. The couple of payment systems, Tencent and the WeChat control majority of the transfers. I mean, they don't need banking anymore. So right. I think it's the response of the government was we're going to put it on blockchain, and we can control it.
But from your point of view, will there be an investment opportunity there? Because really, isn't it just the Chinese currency that is being put into a different format?
I don't think it's gonna create any specific opportunities for investment. I mean, you're not going to buy a Brenman B because it's in a digital format. But at the same time, it will enable to create more models, business models, more efficiencies. I mean, in Europe, we have open banking rules, right? So basically, it means that the banks need to provide an API to your bank account so you can integrate fintech services and products. So it's a similar vector of development as an offering a digital currency. So if everything will be digitized and possible to integrate through an API, we're going to be living in this crazy digital world when everything is basically on blockchain, everything is automated, and it's super efficient. That's where the world is going to.
And are you confident we are heading in that direction? I mean,
absolutely, absolutely. You have to talk to the people who've been in this, the cypher punk movement when everything is digital, decentralized, and you get so many interesting ideas from them that you think is let's see, in 5-10 years, it might be a reality.
In the meantime, thank you very much, George, for a really interesting chat.
Thank you, Charles. My pleasure.
Thanks, and bye for now. Thanks very much to George Zarya of Be Quant. And please join me next week when I'll be talking to Douglas Rushkoff about cypherpunks, the internet, and Bitcoin. Thanks for listening, and from me, Charles Miller, goodbye for now.